I think that's comfort. It's one reason why Nvidia, semiconductors, and Apple are all up, even though some people are afraid of moves to hurt them. Even though it sounds like something out of the Twilight Zone, it's actually a source of comfort that he could make sure that this doesn't have any unintended effects on the big tech industry, Microsoft, or the hyperscalers. I think that's what's going on here, especially since Musk is much more powerful in the White House. Lastly, when you think about state governments, many of them are Democratic and may be angry about what happened at the federal level. Doesn't that make them more against FSD? Unfortunately, this is going to be one of many fights that will happen over the next few years. The main one is on the government level. That looks like it will be important. The carve-out part of tariffs is one reason why Nvidia, semiconductors, and Apple are all up today, even though some people are worried about what will happen with tariffs. Some people think that with Musk in charge, tariffs might not be as bad as they seem when it comes to AI. And I think that's what's important right now. Not just for AI, but for the whole tech space. At the beginning, you said that you think having Tesla in the White House could help him a lot. How? What kinds of rules are we keeping an eye on? I believe there are three things. One is that the EV tax credits are taken away. I think this is bad for the EV industry, especially with what's going on in China. But if Trump really tries to speed up autonomous SD, then everything we talked about today with robots will happen 1 to 2 years earlier. I think that's what most of the people I talk to are most interested in. Can this speed up autonomy? I think the answer is probably yes, which is why the market cap is starting to reach $1 trillion or $1.5 trillion. You're only $19 away from your goal, but it's a big part of the value right now. Keep us up to date. It's great to see you, Dan. I agree, which is good for mergers and acquisitions, big tech, and less government oversight, right? But when it comes to Tesla, it's all about Musk now having a say, whereas Biden didn't give him one either. He can say something important now. Let's talk quickly about generative AI, which is a bigger topic of tech that we talk about a lot when we talk about Nvidia. What do you think his effect will be on moving things along in the government, and what do you think the policy might be? He'll be something like an AI envoy. From a tech point of view, that's pretty much the part he could play. Tesla stock is one of the best movers this morning. It has gone through the roof since last night's election. Let's bring in Dan Ives, a Weber securities analyst with a buy rating on Tesla and a new target of at least $300. He will join us to talk about what this means for Tesla, for big tech, and for Elon Musk. Hi, Dan. Does that make that number different? That being said, I believe this was a smart move by Musk that could pay off hugely for Tesla in the years to come. For beginners, I think $40 to $50 per share is a good price. This isn't just because of what could happen with the tax credit, but also because it levels the playing field. If you take out the Detroit automakers, they will really have an edge in terms of their costs and scope. The important thing about Trump is that he could speed up autonomy and FSD in the end. As we've talked about on the show, this is what we think will open the trillion-dollar market for AI alone. Important. That's right, John. The stock market has shown what kind of person it is for the past 6 weeks. The S&P is very strong this year. It's been up for 9 of the last 10 months. You're right, seasonality tricked us. I thought that between now and election day, there was a greater chance of some kind of correction. We didn't mean for you to sell stocks. People who sell out of fear are always making a mistake, because we said, but if it does pull back, you want to buy that dip right after that. I think we'll be in a tough spot until after the election, but that doesn't mean investors should be bearish right now. I believe we have a very good basic background. That being said, if David is right, a Fed funds rate of 3.5% is great for the economy. For both earnings growth and P/E multiples, this should be good news. It will really pull homes, cars, and durable goods out of a recession. All of this seems like a pretty good background to me. That doesn't mean there couldn't be trouble. So Jay, I guess, I think the idea that there might be caution is kind of like a bad word. It is not right. Because this is a stock market, people should be ready to buy when prices drop. As Tom said, the busiest time for making money is coming up in 2 weeks. Besides. That's right, yes. We chose to talk about the trade today because since 1999, There has been a 6-month window when home builders enter a golden 6-month period. Fundstrat has been writing about this for almost 10 years, and the trade has worked 12 out of the last 15 years. Between October 20 and April 29, home builders did better than the S&P by an average of almost 1,900 basis points. That means that all of the gains that builders make usually happen in those 6 months. When the Fed cuts rates at a time when demand is high and home builders have done a great job of managing their capital, things look better overall. I don't know why timing works that way, but it does. We think this is a good deal for this year. We do talk about the tape when we talk about the next move in the market and whether or not we can trust this comeback. Of course, we all want to know that, so let's ask Tom Lee. He does now live with us. It's great to see you. It's great to see you, Scott. When I look at your notes today, they make me think that the worst is over. Why do you think that? What we're really interested in is the fact that the VIX hit 60 on Monday, which is the third highest level ever. Let's begin with Amazon. What did you see make you feel? It looked pretty interesting to me. Even though cloud didn't meet expectations, the price is still going up. That's right, yes. It's true that Amazon had a few problems. After yesterday, you might have thought that something would get punished, but not Amazon today. It was a big surprise in the quarter that the company made a lot of money, which I think had a lot to do with that. The bottom line made a lot of money. That makes buyers feel a lot better, I think. Not bad for sales, they were pretty close, so it's not a surprise that stock is up. Also, it hasn't been one of the best players in the Magnificent Seven or in technology, so they still have some room to grow. Investors were really pleased by the fact that they raised capital expenditures by 81%, while margins grew at the same time. What do you think about that? It's hard to do that at the same time. Yes, it is, and the spending number was very important. This is the end of the big capex spenders and the cloud spenders. You can see that they are all still focused on capex and spending a lot of money. Because of what Jassy said about the possibilities of AI and creative AI. And because they are still focusing on that, the story will keep going. That should be a good read for Nvidia. They are the last of the Magnificent Seven to report. Let's quickly talk about Apple now. Right now, those shares are down a little more than 1%. That seems to be the main idea, since there were many other good things in this study as well. Gene Munster from Deepwater was one of the people who did the math. Based on his numbers, the forecast for this quarter was for revenue to grow by 4 to 6%. The street wanted almost 7%. Does it make sense to you that the stock is down 1% since then, when there have been so many other good things?